Hello, welcome to my YouTube channel. In this video I will be discussing about exploring the implications, opportunities, and challenges of a digital financial revolution. Central bank digital currencies, CBDCs, have emerged as one of the most significant innovations in the financial sector, capturing the attention of governments, financial institutions, and the public worldwide. As digital currencies issued by central banks, CBDCs represent a new form of money that could revolutionize the financial system. This article will explore the multifaceted implications, opportunities, and challenges posed by CBDCs, with a focus on their potential impact on the global economy, monetary policy, financial inclusion, and the future of cash. Understanding central bank digital currencies, CBDCs. CBDCs represent digital forms of a nation's fiat currency, issued and controlled by the central bank. Unlike decentralized cryptocurrencies like Bitcoin, which operate without any central authority, CBDCs are centralized and backed by the government's legal authority. This makes them a stable and secure alternative to other digital currencies while preserving the sovereignty of national currencies. CBDCs are designed to function alongside existing forms of money, providing a digital complement to physical cash. They can be used for everyday transactions, stored in digital wallets, and exchanged between users seamlessly. The key characteristics of CBDCs include their legal tender status, central bank backing, and the ability to be used for payments both online and offline. Types of CBDCs. CBDCs can be categorized into two primary types: retail and wholesale. Retail CBDCs, these are intended for use by the general public for everyday transactions. Retail CBDCs aim to replace or complement physical cash, making transactions faster and more secure. They can be accessed through mobile apps, digital wallets, or smart cards, allowing users to make payments seamlessly. Wholesale CBDCs, these are designed for use by financial institutions and are typically used for large-scale transactions, interbank settlements, and cross-border payments. Wholesale CBDCs aim to improve the efficiency and security of the financial system by reducing settlement times and lowering the risk of counterparty defaults. Global landscape. Several countries are exploring or actively developing CBDCs to enhance their financial systems. China has been a pioneer in this area with its digital yuan, ECNY, which is being tested in various cities. The European Central Bank is working on the digital euro, which aims to provide a digital alternative to cash while maintaining financial stability in the Eurozone. The United States is also exploring the potential benefits and challenges of a digital dollar, although it has not yet committed to launching a CBDC. The implications of CBDCs on monetary policy. Monetary sovereignty. CBDCs could strengthen a nation's control over its monetary policy by providing central banks with new tools to manage the money supply. For instance, CBDCs allow central banks to implement monetary policies directly, bypassing commercial banks and reducing the time lag between policy decisions and their effects on the economy. This increased control could lead to more effective management of inflation, interest rates, and economic growth. However, the widespread adoption of CBDCs could also challenge monetary sovereignty if foreign CBDCs or private digital currencies become widely used within a domestic economy. This could undermine the central bank's ability to control the money supply and influence economic activity, leading to potential economic instability. Interest rates and inflation. CBDCs offer central banks new ways to influence interest rates and manage inflation. For example, central banks could impose negative interest rates on CBDC holdings, encouraging spending and investment during economic downturns. This tool could be particularly useful in combating deflationary pressures and stimulating economic activity. Financial stability. CBDCs could enhance financial stability by providing a safe, government-backed alternative to private digital currencies and reducing reliance on commercial banks for payment services. In times of financial crisis, CBDCs could serve as a stable store of value, helping to prevent bank runs and maintain public confidence in the financial system. However, the introduction of CBDCs could also pose risks to financial stability, particularly if they lead to disintermediation of banks. If consumers and businesses shift their deposits from commercial banks to CBDCs, banks may face liquidity shortages, reducing their ability to lend and increasing the risk of financial instability. Central banks will need to carefully manage the transition to CBDCs to avoid these potential risks. CBDCs and financial inclusion. Bridging the gap. One of the most significant benefits of CBDCs is their potential to promote financial inclusion. In many parts of the world, large segments of the population remain unbanked or underbanked, lacking access to basic financial services. CBDCs could provide these individuals with a digital alternative to cash, allowing them to participate in the formal economy without the need for a traditional bank account. By leveraging mobile technology and digital wallets, CBDCs can be accessed by anyone with a smartphone or internet connection, making financial services more accessible to marginalized populations. This could help to reduce poverty, increase economic participation, and promote social and economic development. Challenges of implementation. While the potential benefits of CBDCs for financial inclusion are significant, there are also challenges to achieving widespread adoption. Technological barriers, such as the lack of internet connectivity and digital literacy in certain regions, could limit the effectiveness of CBDCs in reaching the unbanked. Additionally, there are concerns about whether CBDCs will be designed in a way that is user-friendly and accessible to all, particularly those with limited financial experience or digital literacy. Central banks and governments will need to work closely with stakeholders, including technology providers, financial institutions, and community organizations, to ensure that CBDCs are implemented in a way that promotes financial inclusion and addresses the needs of all users. Privacy and data protection. Privacy and data protection are critical issues in the design and implementation of CBDCs. While CBDCs could potentially offer greater transparency in financial transactions, they also raise concerns about surveillance and the potential for government overreach. Ensuring that CBDCs respect individuals' privacy while complying with regulations, such as anti-money laundering, AML, and Know Your Customer, KYC, requirements, will be a significant challenge for central banks. One approach could be to design CBDCs with built-in privacy features, such as anonymization or limited disclosure of transaction data, while still allowing for regulatory oversight and enforcement. Thanks for watching my video. Don't forget to subscribe to my YouTube channel, like my video and turn on the notification button for more videos.